Welcome to Training the Newbie, the podcast where we explore what happens when two worlds collide. I'm your host, Bill, and in this series, I'm taking on a bold challenge, training someone from the halls of academia, a professor with a rich background in leadership and entrepreneurship, to navigate the fast-paced, high-stakes world of Forex trading. It's a journey of transformation, uncertainty, and insight, where theory meets practice and strategy meets screen time. Whether you're a teacher, an artist, a coder, or just someone who's curious about making your money work smarter, this show is for you, because if a seasoned academic can step into the Forex arena and learn to read the markets like a pro, why not you? Let's dive in. Let me share my screen. What do I have here? Here's what we're going to talk about today. And I have a bunch of documents that I'm going to text you as we go through them. I was going to talk about cultivating multiple streams of income, the trading being one of them. And I'm going to finish off talking about PineScript because you mentioned you were interested in that. So I'll talk a little bit about that at the end. So there's really two ways for you to do this. There's what I call a retail trader, which is what you are right now, which is just an individual that opens up a brokerage account and trades and tries to make money doing it. There are some upsides and downsides to doing it that way. They mostly have to do with taxes. You can make a lot of money as a retail trader. I do both because I have that fund, but that fund is pretty much a business for me, and it does not require my undivided attention every single day. That's something I can check in once or twice a week on to make sure that my strategies are working in there and nothing's gone sideways. When you're a retail trader, it's really pretty simple. You just choose a broker that you want to select to do your trading with. There's two that I would recommend. One of them is Forex.com and the other one is Oanda. I use Oanda, and the reason for that is they have some additional features and flexibility in their brokerage account that are unavailable in most of the other brokerage accounts for trading Forex. For example, you can take your account and you can break it up into small sub accounts. If you were interested in doing some sort of hedging strategy, you could have one account dedicated to doing long trades and the other to doing short trades. So if you wanted to do that straddle strategy we talked about last time where you get a long and a short at the same time, that's the way you do it. The other thing that they do is most of the brokers will restrict you to the size of the lots that you can trade. And there's like what's called a standard lot, which is, I believe, 100,000, let's call them shares of whatever it is that you're trading. And then they have mini lots and micro lots. Oanda has this, I can't remember what they call it, but so let's say I buy $1,000 of the euro. That's what most brokers will let you do. With Oanda, I can buy $1 worth of euro. Okay. And the reason where that becomes useful is when you do that waterfall strategy or that dollar cost averaging strategy that we talked about. In order for you to have two positions at the same time, they have to be different amounts. So I could have 1,000.
Oh, really?
Yeah, I could have 1,000 shares of let's say a long position, and let's say that went against me, and I wanted to start to buy in more at a lower price, so I average out to a closer break-even point. I can then buy $1,001 of it, and then you'll have two positions on your screen. And then if I needed to do it again, I can do $1,002 kind of a thing of a position. So it gives you that additional flexibility if you choose to use that particular strategy. If you're a retail trader, from a tax standpoint, it's not great. I never understood why the tax laws are like this, but basically, if you make a profit, the government taxes it as ordinary income. There's different tiers of up to this much it gets taxed at this amount, and above that amount it gets taxed at a different amount. I have some documents that'll show you those differences, but it averages out to basically ordinary income. Depending on your tax bracket, I usually say that's like 30%, 30, 34. If you lose, you can only deduct $3,000 per year, I believe it is, from your taxes at a time until you work off the entire loss. So the odds are stacked against you there. It'd be really nice if you could write off 100% of your losses against your wins, but you can't do that as a retail trader.
So it's not every year you figure out
How much you really made. You'll get a statement at the end of the year. They'll give you a P&L basically.
it doesn't close out or reconcile at the end of the year. So it's not like I could make, if I made, let's say, what's an example? If I made $10,000, but then on the last day lost $10,000, I would still have to pay taxes on $7,000.
Yes, you would. And then you would be deducting 3,000 for the next however many years it takes you to pay. So with 3 years, 4 years
It's like against your wins. So
against your wins. Yeah, exactly.
like amateurize your losses, I guess.
Correct. So here's a document I made for you. Currencies are taxed between 10% and 37%, and it's treated basically as ordinary income. So yes, if you made $10,000, you'd be paying taxes on 7,000, and then you get to deduct another 3,000-ish a year until you've worked that all down, the thing. And I have it here for all the different instruments for stocks, for options, for futures, for currencies, etc. So if you do that, you can see what that all.
Are there any tax advantages from one security to the other? Is Forex particularly bad, or is
No,
that
not
a
not
risk
not
still?
really. If you look here, you have short or for stocks, it's ordinary income, and you have if you hold a position longer than a year, it's considered long-term capital gain. So you have a little lower percentage of taxes. That's the benefit there. If you're trading options, 60-40 split, 60% of it is long-term debt, 40% of it is short-term. So it just, I basically liked currency futures because it's easy for me to figure out ordinary income. This just becomes, I don't know. I have an accountant
An
that does it
accounting
for
burden?
me. This is
Yeah.
just an easier form. It's less hassle. I don't have to keep track of as much. Whereas if you do some of these stocks, which is what I started with, was a huge pain in the butt because you have that sort of that difference between ordinary income and long-term capital gain, depending on how long you hold the position. And then
Right.
they have this really screwy rule. If you, let's say you bought something on December 24th and you held it until January 2nd, you have this rule of, it's really complicated about how you have to handle the taxes for a position you held into the next year. It ends up just chewing up a lot of accounting fees. And when I finally settled on currencies, it just made it super simple. I give him one document. It's like my P&L, and he uses that to do up my taxes for me. Okay. So that's basically the.
Is there ever, how big do you think the risk is of that? Lose $10,000 the day before and have to pay taxes on money you don't have, kind of thing?
If you lose 100% of your kitty or whatever, your equity, you won't owe any taxes. It's gonna completely be a loss for that year. But if you have
That's
some profit, yeah,
that's what I was saying. So I thought it was like on any given trade. So like in January, if I make a trade, I win 10,000, I'm up $10,000, and then in December I lose $10,000. You're saying I
yeah,
would pay
the
nothing because
report
it
you
would be
get at the
zero,
end of the year is you're going to be at net zero.
like a wash sales situation. I thought this was like that, where because
No,
you
you
have a
just
win.
you would put in a $10,000 loss. The only gotcha is you only get to write off 3,000 of that a year. But there would be no profit for you to pay taxes on. Yeah, on the year.
I see. I thought you were saying like I had to pay taxes every time I won.
No, oh
Like,
no.
yeah,
Oh no, no,
I
no. It
got you.
gets
Okay,
tallied
that
up at
makes
the
more
end.
sense.
Yeah, it gets tallied up at the end. So I will drop this one in your text right there. That's that document. So that's retail trading. Like I said, I do both. Now, for the fund, if you start to get really successful at trading, most people that get successful do this. You can elect a tax category. It's called mark to market. Fundamentally, what that means is you are a business, and a whole bunch of things when you're trading become a capital expense for you, which you can deduct off your income. Okay. So, like your computer setup, any software that you buy, a portion of your utilities, if you're paying for any kind of services. When you're a retail trader, you get a lot of stuff for free, right? You get the feed for the stocks or whatever it is that you're trading for free. You get access to all these indicators for free. If you elect a mark to market category, that all changes. Now, what happens is the people that provide those services, I don't know if you've ever filled out a form to open up a brokerage account, but there's a little box in there that they ask, are you a professional trader? And if you click that box, you better be going mark to market because whoever you open up accounts with will see that categorization, and you are then kicked up into a different tier as far as pricing. So you may end up having to pay a lot of money just for your feed. You will pay more fees and things like that for the trades, commissions, etc. Now that's fine when you're making a lot of money. This also makes the complexity of the tax return significantly more complicated. Okay. So you need to find an accountant that has experience at doing that type of tax return. If you get to that point, I can turn you on to some folks, but they're not Joe CPA down the street, if that makes any
Hmm.
sense. They're like people that specialize in doing these kinds of things and working with hedge funds, et cetera. This fund makes enough money to justify that infrastructure. It works and it's a choice. It's something you can do if you want to do it, right? Just be aware of.
Is there any other advantage? So it doesn't sound like there are many advantages really. It's
If you're,
access to
if
all the
you're,
same stuff.
yeah, if you start making millions of dollars trading, you should be doing this because of the tax advantages that you'll get from doing
Oh,
this.
okay.
Yeah. If you remain a retail trader, you're going to get hammered big time on taxes. There's a whole bunch of things that your accountant can do for you to help you maximize the revenue that you're earning that you can't do as a retail trader. So
Hmm.
just keep that in mind. The other thing that I wanted you to understand was coming up with a plan for your trading. So I created a sample one for you. So you just get an idea of what that looks like. So this is a sample plan I just made based on my swing point breakout strategy. And just give you an idea, what is the plan? Do you have a pre-market routine? I have four instruments that I've selected that I trade every day. The reason that I selected them is they work really well with my system. You'll find different currency pairs either work really good with what you're doing or they work really bad. A lot of that has to do with the market. So if you're trading the Euro USD pair, a bajillion people trade that. One of the things I never mentioned to you is the Forex market is the largest market on the planet. It significantly dwarfs every other single market out there. So when you do select to trade the Euro USD, you are competing with all of the best traders on the planet. So I try to stay away from those, and I like to trade the Aussie US dollar because not that many people trade the Aussie US dollar, but yet it still trades very nicely with my systems. It doesn't have any crazy mood swings or massive reactions to unpredictable news, etc. So that's just part of your pre-market routine. Then you have to very clearly define what's your entry criteria. So, for example, let the market open and settle for 30 to 45 minutes to avoid crazy volatility. I don't know if you've ever paid attention to this, but when the Forex market reopens at about 4:10 in the afternoon, the spreads, which is the distance between the bid and the ask, what you want to buy and what you want to sell it, is crazy. A instrument that might have a 2 or 3 pip spread will suddenly have a 40 or 50 pip spread. And I've had a lot of new traders who are really excited and they want to trade 24/7, which is what everybody does. They'll hold a position with a profit target and a stop loss. Let's say they have a 15 pip stop loss and the market will open at 410 and it'll have a 50 pip spread. They'll immediately get stopped out and they may not even get stopped out at that 15 pips or whatever that they put in for their stop
Right.
loss because that spread just went wacky on them. So they end up with a giant loss that they weren't expecting. So you just got to be careful. You got to have that all gamed out in advance. If you use the sports analogy, you got to have your plan, got to know what all your plays are in advance, when you're going to execute them, when you're not going to execute them. And then these have to do with your trading strategy. Do you want it to break out from whatever it is that you're doing? Do you want it to increase in volume, et cetera, et cetera? I'll show you an example here. This is my, can I just drag this over? We'll see. Yeah, how cool. All right, so this is my scalping strategy right here. So the way this works is, do I have, yeah, I got the dot. Okay, so the way this works, you see this kind of clouded area, the grayish area, right? We call this a squeeze, right? So what this is, a Bollinger Band inside of a Keltner channel. And what that effectively does is it highlights an area where there's a lot of consolidation going on and not much of a trend. So here you see a consolidation. And then I get an alert when the Bollinger Band breaks out of the Keltner channel. So that's like right here. So Bollinger Band, just so you know, the Keltner channel is like a pretty straight channel on the top and bottom. And then the Bollinger Band is more volatile on the inside. So when the inside one breaks through the outside one, I get an alert. Okay. And then in addition to that alert, I have some other filtering. The relative strength has to reach a certain level, volume has to reach a certain level. That will create a signal. Okay, like right here, and it says go long. So that is when I would enter the trade. I automatically have it calculate my stop loss and my profit target. And I believe I have that set as a 1 to 1.67 ratio. So if I'm successful when I enter, I should get, if I hit the profit target, I should get almost 2 times what I would get if I get stopped out. And then in addition to that, I have a trailing stop strategy. And this is all stuff that I gamed out with the AI models because they can go back and they can look at the pricing and the patterns and come up with what kind of strategy will work. So the idea here is I went long on this trade. It went over 50% of the distance to the profit target. Once that happens, these trailing stop loss dots start painting. So I can move my stop loss up from the stop to past break even. And if I continue to follow the trade, let's say it goes up, but it gets that close to profit target but doesn't make it, my trailing stop has also been painting, and that's where I have my stop. So the worst thing that can happen to me is I only made 50% of the profit. And does that make sense?
Yeah, I think so.
And the other thing to make that even better is when the trailing stop loss triggers, you could close half of your position. So you've locked in 50% of your profit at that point, right? And then you can just keep trailing the stop. And if you actually make it to the profit target, then you've made 100% of what you were trying to make. But let's say you made the trailing stop kicked in, you sold half, then it pulled back here, you're still in the trade, the stop's still incrementing to the upside, and then you actually hit the stop. Okay, it's probably better than 50%. It's probably maybe like at 60 or 70% of the trade. So you made 50% on the first half of your money and you made 60 or 70% on the second half of your money, and you're still in good shape. You're not losing a ton of money. And if it actually hits the profit target, then you made 100% of what you were trying to make. So that's part of a trading plan, kind of an idea too, that you want to have all that stuff figured out in advance. And that's, here's what I was just talking about, the trade and execution management. That's all part of the game. I try to have this stuff all planned out in advance with a set of rules so that I can do the set it and forget it kind of thing. Because what I've found, at least for me, is if I sit there at the screen, then my mind starts to go nuts. I start to think of every possible scenario, and every time I see a little tweak or movement in price, I start doing what ifs in my head. Just when I was learning, I would either get out of a trade too soon and then it would continue on and take a profit, or I missed a profit I could have taken, etc. So just be aware of all that stuff. The psychological part of this is the hardest part of trading, make you nuts. So anyway, this is a sample plan for you. I'm going to send that to you now. All right, and then moving on. So that's your trading plan. Then we want to talk about risk profile, risk management. This document, the name of the game is protect your capital. You want to figure out in advance how much you're willing to risk on a particular trade. So if you have a $10,000 account, this is a rule of thumb. Any books you read, et cetera, you're going to see 1% of your trading capital. When you start to get good, you can probably eke that up to 2 or 3%, or maybe even 5% if you're really confident in your system. But the main thing you want to do is to have this figured out in advance. How much am I willing to bet on every bet, kind of a thing. Once you know that, then you can do the math and figure out. Remember when we were talking about the law of large numbers? You can figure out how many losses you can take in a row and survive because that's going to chip away at your trading capital and it's also going to chip away at your psychology. So if you have a risk plan in advance, that helps an awful lot with the psychology piece. No one trade is going to bankrupt me. You'll be able to take a bunch of tries so you can get through that string of losses that everybody inevitably goes through and survive with enough capital to continue trading. Your equity curve does not go up like that. It goes like this, like that. It's not a linear thing. It depends on the volatility, it depends on the markets at any given period of time. Just be aware of that because that can get you too. Daily loss limit. I don't do this, but I haven't had a problem with this for such a long time, which is mostly why I don't do it. Some people will say, all right, the maximum amount of trades that I will take in a day is three. If I am still at a loss after three trades, I just quit. All right. And on to the next day, kind of a thing. When you're first starting out and learning, it's hard to do. It's hard to have that discipline. I've had many students that weren't able to do this, and the psychology piece takes over. They get mad. They keep trading. They do what's called revenge trading. The next one's going to be the one. I'm going to make all the money back. And all they end up doing is just digging a deeper hole. So learn to maybe have a rule where if I lose X amount in a day trades, then I just stop trading because it's just not a good day. And you will notice a pattern in the days and also in the news cycles when there'll be days where you're just killing it. And then there's other days where you can make a nickel to save your life, kind of a thing. The advice I always gave was take what the market gives you, not what you want. Some days it'll give you $10,000. Some days it'll give you $2. But be happy when it gives you the $2 and didn't take away 400.
Right.
So just be very careful of that. Always use stop losses. The reason for that is because it takes the emotion out of it, right? You've set these targets and these places where you're definitely going to get out. And once you've set them, don't go back and take them out. I've had people do that before too. They go through this whole process, they set up their plan, they take a trade, they put in the stops, and then it starts to go against them and they at the last minute pull the stop loss out because they think it's going to do a U-turn and they're going to make their money back. And the trading gods are not nice when it comes to this stuff. They will slaughter you. That's where the term pigs get slaughtered comes from in the financial
Yeah.
markets. So you get greedy and you think, if I just pull the stop out, it'll just go down a little farther and then it'll turn around. And if you're guessing where price is going, you're in a bad place. Okay. You want to be reacting to what price is doing, but you don't want to be predicting to what price is about to do. And then maintain a minimum risk reward ratio. I see this a lot, 1 to 2. It's really hard. If you have a good edge, you game out your strategy to, like I do, where you can see its return over time. So, see right here, I have a 53% success rate on this particular strategy. So, as long as I'm making 2 times more when I win than I am when I lose, 53% of the time I'm right. At the end of the day, remember that spreadsheet I showed you like on the very first day?
Yeah.
You're going to be profitable kind of a thing. So just be aware of that. The hardest part that you're going to struggle with is not the technical part, not figuring out how to place the trades or use the systems. It's going to be controlling yourself. That's the enchilada right there. Okay. So that's the risk profile. Let me send that to you now, and then you can read that at your leisure. All right, cash flow. I created a sample plan for you on this as well. You need to decide how much money you're going to trade with. The fund has a bunch of money in it from family and friends invested in that, so I never touch that. But for the day trading stuff that I do, I limit myself to anywhere between having, it depends on how much extra capital I have on hand, but I've had as little as 10,000 in the account. I've had as much as 50,000 in the account. It really doesn't matter. Whatever that number is for each individual is a personal thing, depending on how much money. The first thing is that has to be money that you can definitely lose and it won't kill you. Think of it as tuition. That's the way I like to describe it. It's your tuition for learning how to do this. So one of the things that I always do, let's say I started with a $10,000 account. Every week or every 2 weeks, whatever I have above that $10,000, I withdraw and put in another account. The reason that I do that is one, to preserve my profits. If they're not there, I can't lose them. The only thing I'll be able to lose is my original equity that I invested in the business, right? The other reason that I do that is because when that kitty starts to get big, you start to get greedy and you go, oh, I can place a trade twice the size that I was able to place before, and I'll make twice the profit. So by having a cash flow strategy like this, where you have a threshold, and once you hit that threshold, you take anything above that out of your account and put that aside. It's kind of like when you're at the casino, right? If you sat at the table with $100 and then you won a couple of hands of blackjack and now you have 200, you take that original 100 and put it in your pocket and trade with the other money that you made. It keeps you from losing your mind, I guess is the best way to put it. You can do it any way you want, do the threshold thing, but you can do it on percentages. Just the important thing is to do it scheduled. I do it pretty much weekly because sometimes I have really good weeks and it's very tempting for me to just leave it in there, but I just automatically I have it as an auto withdrawal. I just do not want to be tempted by it.
So I would have assumed that you'd want to leave it in there because then you get this benefit of compounding, where over time your account size does get bigger, and that means each of your percentage trades gets you more money. Because if you stay, say, at the $10,000 thing, like you can't ever really make more significant money because your trade size will always be capped.
So you have to set an additional threshold. When you have, let's say you started out with 10 and you ended up the year with 50. So you have 40 grand extra. Maybe start the next year with 20 grand. Then you benefit from that compounding. Now you've got a year's more experience doing it. Learn to grow slowly. That's actually the strategy that I started the fund with. I got it up to a certain size. And when I got to the point where I was really good at this, that is when I started to allow other people to put their money into it because I felt confident enough that I'm not going to lose everybody's money in the fund. But if you're just going to trade your own personal, maybe set like targets in 6 months. If I have X amount extra put aside, then I will increase the base system from 10 grand to 20 grand or 30 grand, whatever it is. It doesn't matter. Then you can benefit from that compounding thing that you're talking about. And it's in a more controlled fashion, if that makes sense. If you just allow it to grow, I can guarantee you that green monster is going to bite you on the ass and you're going to take that big trade, betting the farm. And there's no worse feeling than having grown an account to $50,000 and then losing 30,000 on one trade. That's psychologically devastating, and I'm trying to protect you from having to do that. What else do I have in here? Yeah, so these are just different examples that I researched and threw in here just so you got a couple of different ideas. This is a real personal thing. You come up with it on your own and decide what works best for you. But the big point that I just want to make is just have a cash flow strategy, right? I don't care what it is, whatever works for you, just make sure you have one. Don't just keep letting the thing grow and then be in a position to be tempted to make that one home run swing at it and then watch all your money just vanish in seconds. That's just really very frustrating.
And in that situation, what you're talking about is not abiding by your 1% of account size trade. You're saying that as you go from 10,000 to 40,000, then people's inclination is to break that percentage rule. Is that what you're
Correct.
saying?
Oh, I didn't
Okay.
see this. I do have a mark to market report. I did that for you too. So it explains what it is, the tax implications. So you can read through this at your leisure, but basically you're a business and you can claim your losses in real time. You're not kneecapped by the IRS rules for day traders. This
Yeah.
little thing will show you that. So I'll give you that. Mark to market. All right. What haven't we? Cash flow, taxes we talked about. All right. Do you have any questions on that before I move to Pine Script?
Yeah, I still got tons, but
Feel free to ask those at any time. Text me or Slack me or whatever. As far as the content that I wanted you to understand before you started to trade, these were the big ones. A lot of people don't talk about the business part of this, and I think that's one of the most important parts. You have to view this as a business and not a hobby or a gambling or whatever. And you have to put the proper risk management and structure around it. You can continue to do it profitably over a long period of time.
you know what? The way I would describe that, Bill, is less because a lot of the stuff you talked about isn't a business plan because again, there's this option of being a solo person versus a actual incorporated entity. I think what you're really talking about, especially right there, is the distinction between a kind of individual talent or intuition approach versus to create a system.
Correct.
Like you're saying, you got to have a system, the trading plan, the risk profile, the cash flow management in order to hedge against the psychological biases that you might have as you go through this.
Because I can show you a whole bunch of guys that were killer traders and then lost it all. And even in some of those books that I recommended to you, did I recommend the
YouTube
book
video.
on the interviews with the traders? Those are really good if you get a chance to listen to those. The one thing that really stuck out for me is every single one of them did it in a completely different way and had these even wacky reasons why they would get in a position or get out of a position kind of a thing. And it worked for them. They made millions of dollars doing it. So there is no right or wrong way to do this. It's a very personal way to do it. It has to be customized to the individual. And that's why I don't spend much time with copy trading. It's useful to go in a trading room when you're first starting out just to get a feel for what other people are doing. But then you got to deal with all the crap of, oh, you got to do it this way. You're doing it wrong. And that's where I just lose interest because there is no right or wrong way to do it. It's if the way you do it works and you're making money, that's the right way. It's not like you should use this other indicator and do it this other way because you're already doing it. The thing people are very weird about these are the rules and you got to follow the rules. And if you don't follow the rules, you don't know what you're doing. And that's a bunch of baloney. If you spend any time in those chat rooms or trading forums, everybody's got an opinion about how to do it. And there's so many trolls and I get trolled all the time. It's pretty funny.
Yeah. So before we get to Pine Script, the only other, and maybe we'll talk about this when we get back to the TradingView setup or whatever, but is there anything that I need to know or any particular way of setting up those little indicator, that basically the math behind the indicators to be able to test strategies, see how they're performing, keep track of all that stuff? Like you had that little breakout box for your scalping thing. Like how do you, that seemed to me, that seems like the most important thing is how do you bring together your set of indicators and then start to experiment to test them and then
What I would recommend that you do is
Are you an active trader looking to elevate your trading skills? We invite you to join the Trade Faction, a community where you can witness trades called out live. To connect with fellow traders and gain real-time insights, simply click the link in the description or scan the QR code to join our free Slack channel. This is a great opportunity to enhance your trading strategies and stay ahead of the market. Also, don't forget to download our new Forex AI Sage app in the Apple App Store to use the latest in agentic AI to help you trade. So what are you waiting for? Click that link or scan the QR code now and download the app today.
Start out with looking at what other people have done. Okay. So if I go here and create another window, or whatever, newbie template. Yeah, I don't think I have anything on that one that I can destroy. Remember, I showed you all these different indicators here. We were playing with them. So support and resistance, pick the thing that you're interested in using. Did any of these resonate with you when I showed them to you the first time? You know, the support.
Yeah, sure. I can't remember.
So one was support and resistance. This was breakout trading. Remember, you trade the breakouts?
Yeah.
Then there was one called moving average trading. This one was market structure. This one was grid trading. That's the dollar cost averaging kind of idea.
Oh, right.
Average true range. So it's calculating what the average range is in real time. So right now it's saying it probably shouldn't go much higher than that or much lower than that. So when it gets to that point, it'll probably turn around, or it gets to this point, it'll probably turn back up. Yeah,
Strategy.
it's basically a regression. Or higher highs, lower lows. This is more like a trend definition kind of a strategy. What I would do if you're just starting out is pick one of those and play with it and see if you like it. Because that's ultimately what you need to be able to do, is to find something that you're comfortable with. For example, I like my strategies because I built them and I know exactly what they do and why. Okay. And you got to know exactly how they work and why they work the way they work. Okay. So I do this squeeze strategy, and that works really good for me. Dave, on the other hand, he loves support and resistance. So for him, there's no other way to trade than doing support and resistance trading. If it goes up to the line and it starts to pull away, he'll go short. If it goes down to the line and starts to go up, he goes long. And he likes that. It's real simple. He doesn't have to think about too much, right? If it goes past the line, that's where his stop loss is. It's a personal thing, and that's why I always encourage everybody to come up with their own way to do it, their own system on how to do it, etc. Make sense? And let's say you wanted to see how this, and we're going to slip into the PineScript thing here. There's a little source code tab here. So if I click on that, all right, this box is going to open up in the bottom. And if I maximize the box, you can actually look at, whoops, that's not the right one. Where'd it go? There we go. Support and resistance. You can look at the code that somebody wrote. All this stuff is open source. Some of it is licensed, so you have to be careful. But yeah, Lux Algo, I used to think this was a guy, but I'm pretty sure this is a company that writes a bunch of indicators. So they have a copyright on this, right? That's if you copy it line for line and use it. If you copied this and then started a business and said, I'm selling this support resistance indicator, you would get sued. But if you look at how he did it, or they did it, or she did it, and then you rewrote it in your own fashion, or maybe you changed some things or tweaked some things. I like to compare it to like the music business. There's only, what is it? How many keys?
Right.
1, 2, 3, 4, 5, 6, 7, 8. There's only so many notes, right? Everybody's going to eventually use the same notes to write a piece of music. So you're going to be stomping on what somebody did in the past. But if you tweak it a little bit, people write different songs that people like. Same thing with code. Look at the code, look how they wrote it, look at their ideas, and then formulate your own interpretation of that and rewrite the code in your own way, kind of a thing, right? That's what I would recommend you do. PineScript is a scripted language, although when you save your indicator, it says it's compiling it. It really isn't compiling it, it's interpreting it, but it's very Pythonish If you've ever coded in Python, it looks like
A little
that.
bit. Yeah.
It's got all the basic, it's got constants and variables, it's got for loops, control structures. You can make functions. It's got plotting, a bunch of plotting routines for putting things on a chart. It's got code sense. I can't get it to do it right now, but if you hover over something, there we go. See it coming up there? It'll give you
Oh
the,
yeah.
like an interactive manual. Here's what you can do with that particular function or whatever. So it's got all of the modern software development tools built into it. It's really nice. It was one of the reasons that I moved to Forex because I used to be with Thinkorswim, and they had a language there called ThinkScript. But once they bought out the little startup that created Thinkorswim and made them all millionaires, they retired. Then Ameritrade never put another penny into that stuff and never had another release of the software for a decade. So the
Right.
really cool thing about this is it's very modern. It's constantly being updated. There's a social media component to it, as you saw from looking at all the different indicators. There's people like creating indicators and sharing them with each other. So there's a lot of interaction there. So the ability to learn is much easier. The learning
Hmm.
curve. You can see what other people did. They have some
And you can see it all just
here in TradingView, and it's free. They have a version history, which is like a built-in GitHub. If you make
huh.
changes, you can see what the changes are. You can go back to previous versions of it. If that wasn't there, I'd be killing myself because I'm constantly breaking things and redoing them. If you
And
get,
that's just for private to you. You mean like your changes to the script
yes,
when you
yes,
for
your script gets saved. It's not local, it's in the cloud, but it's saved in your account. So, like I have, if I go in the indicators and I go to personal,
uh,
these are scripts that I've written. So, if I look at this one here, break even lines, see, I put my stuff in there.
that's cool.
Okay. Yeah, and there's just a lot of cool stuff in here. Like I said, the version history. This thing here, the latest release of the PineScript is version 6, but it's a little wonky, so I haven't converted all my code to it yet. I'm one release back, but that's just like an old engineer thing on me. I
Right.
always drag my feet going to the new release. You can create an indicator or a strategy or a library. Okay. When you get more advanced, you can take a indicator and turn it into a strategy. And then what the strategy does, let me see if I can find one here so I can show it to you. Go into here and go into technicals. If I go into a strategy, let's just look at a Bollinger Band strategy. So then what happens is a couple of things. It shows you, let me turn off this support and resistance one. Where are you? We got big storms coming up here. Can hear them booming in the background. That one, I'm going to turn that off. Okay, so here with the Bollinger Band strategy, it's printing on my chart where you would get in and out of trades. Okay. And then at the bottom, if I bring this up, it shows you the performance of that strategy. All right. A Bollinger Band strategy is pretty profitable. Don't let this deceive you, though, because what happens is you may be in a trend and everybody's a genius in the trend. That's my saying, right? Your strategy is working great in a trend. If it suddenly flattens out, you may have a crap ton of losses. It just depends how far back it's looking. But
Right.
as you're developing things, you can build a strategy and then there's a lot of data here. So this is a lot of the data that I feed into my models. It can go back and it can look and see what happened. Here's a list of all the trades that were profitable, not profitable, et cetera, et cetera. So you can build a strategy for your indicator and kind of game it out that way.
A strategy in this case is just tracking your performance. Is that what a
Correct. It's
strategy?
simulation of your performance. Had you actually executed these trades?
It's not just
Your history is however far back you're looking. It said, if
okay.
these conditions happen, I got in a long, these conditions happen, I got in a short, I got out here, I put my stop loss here. How much would I have made or lost? That's what this, based on that indicator, exactly. I personally don't use it very much. And the reason for that is I haven't found an effective way that gives me true results. There's a lot of things a strategy can't capture, which is like intraday volatility. A news event happened, which would have spiked you out of a trade, doesn't always capture that in a strategy. There's a lot of weird things. People call this backtesting. I am not a big proponent of backtesting. I like forward looking. I run my models forward to see if they're working, not backwards. I'd rather go into a paper trader and watch it actually take trades that are really happening in real time with phony money to see how it behaves rather than punching into a back tester like this and say, oh, if you took this, you would have made $1 million. If you did this, it might work for some people. It doesn't work. I have no confidence in it other than to give you a
Well, and
general idea of is it profitable or not profitable. It's
so is that because you really value your own personal trading psychology? Because in some ways you're saying like you de-emphasize the much larger data set of past experiences to prioritize the forward paper trading so that you can really feel how it works.
Yeah, I think that's part of the issue. There's a whole bunch of stuff that you internalize, and there's a whole bunch of stuff that you learn from experience just sitting in the chair and watching charts go by all day long. You start to get good at understanding where it may or may not go, if that makes sense.
Yeah.
Whereas if you drop it in a system like this, it's very static. It doesn't catch all the little nuances that happen during the day very well. And that can give you a false sense of confidence. That's what I don't like. And all of these indicators, except for a very few, are backward looking indicators. So that means that like this little arrow may not have painted until you were all the way here. Okay, does that make
Mm,
sense? Whereas on a back test, it looks like, oh, I should have got in right here and I would have made all that money. Well, you didn't because that arrow, the conditions to have that arrow print or plot didn't
yeah.
happen until that bar. So it was already over by the time the thing emerged on your chart. So that's giving you a false sense of confidence.
Yeah.
Okay?
That indicator wouldn't really have been there. That trade wasn't really an option based on your strategy
Correct.
or
Correct.
your plan.
Correct. And that's why I always test it going forward instead of going backwards. That will give you a better, and you can do that. I'll show you that here when I talk about where the brokerage stuff is. Do you have any other questions on PineScript? That's really all there is to it. There's not a whole lot. It's this tab right here, the Pine Editor. Let me just look and see if I forgot to tell you about anything. You can publish your indicators, but you have to upgrade to a per pay subscription for this. People publish their indicators to sell them or rent them. I don't know exactly. I've never done that. I don't care. But that is something that you can do. Like the guy before that I was showing you, that Lux Algo, they have several indicators that they sell. They'll give you like a teaser one and then the deluxe
The
one.
pro version.
Yeah, exactly. That they'll sell to you. I think some people make that a little cottage industry. It is what it is. It's a great language. It's got a lot of features. The one thing that I didn't tell you about was you can create your own libraries. Okay. So when you get very advanced with this stuff, for example, the way a lot of my indicators work is as they're running, they're collecting data, right? And after a certain period of time happens, that data gets shot through one of my libraries to my models, my AI models. The AI
Run
models
that
live
some.
on my computer locally here. The library is the mechanism to get it from PineScript to my models. The library is the intermediate step. It's just a bunch of code that works kind of like an API to allow me to get hooks into my models. So basically, I'm just feeding the model with data as I'm trading every single day. When I first started using AI, I was getting it to try to predict patterns before they happened. Look at the way these candles are behaving. I think this kind of pattern is going to happen, and that's a tradable pattern. That worked okay, but not that great. I had an epiphany one day, and I said, what if I dump a whole crap ton of trading data in the model and then just use it to ask questions? So that's the mode that I'm in. So then what I've ended up doing then is now I have a very traditional looking indicators on the front end, but they have these little hooks in them that send data to my models. And then I can go to the model and say, do I have all the settings set up the best to capture potential profit in these kinds of market conditions? It's a consolidated position. It's a consolidated time. It's a heavily trending time. It's a very volatile time, etc. So that allows me to make these very sophisticated indicators that are extremely accurate in different market conditions that kind of update, they tweak themselves in real time, if that makes sense, to what they're seeing on the screen. So the set of settings I would have for a sideways move would be very different than the set of settings that I have for when it's trending really hard up or trending really down, or when it's just crazy shit.
How do you change that in TradingView? Or like, how does, like, you're saying that your AI model can come back and directly influence like your
Yes.
set of indicators, and we
Yeah,
can go
it can.
both ways?
Yeah, it can. So here, I'll show you. This is the support and resistance one. So here you have some things that you can change. Like I want it looking back 15 bars. I want it looking forward 15 bars. So what that tells me right away is I'm not getting a real indicator until at least 30 bars have gone by. Okay. And then this is also looking at volume. I don't know what basing his volume threshold at, but that he's saying look for a area of consolidation of price over a 30 bar period where volume is X amount. That would be,
Yeah.
I haven't looked at the code, but that's what I would guess that they're doing here. So these kind of parameters you can place in variables and pass back and forth like you can in any other programming language. Okay. So that when certain conditions happen, you can mess with them, the thing. And then they have styling things like what kind of lines do you want, what colors do you want them to be, etc. You can tell it which charts you want them visible on. Do you want them on the seconds, minutes, hours, days, weeks, months, etc. And those are parameters in the code. If I bring up the code here, see this little input statement right here? That's where those parameters are set. He's got it hard coded to 15, right? If I write code that makes that a variable, I can I can do something and look at what's going on a chart and say, okay, when this thing is equal to 5, go through my model and ask the AI, and the AI says, oh, that thing should really be set to 7 instead of 15. And it can pass back the value in the variable and make those adjustments
How does this software connect to your local model?
like an API call. That's probably the easiest
That's
way
just
to.
a normal part of TradingView.
You build a library with your own personal hook in it. Now, that's why I had to build a library because TradingView does not give you the hooks. So there's kind of like this firewall between my stuff and their stuff. And that's what lives in my
Yeah.
library. And I cannot get at anything that has to do with money. I couldn't go in and automate a trade. I couldn't get it
Oh, okay.
to go and say buy 100 shares or sell 100 shares or whatever. I can go in and mess with variables and equations and things like that, but I cannot touch money in any way, shape, or form. There's a very big restriction on that. But data, no problem. Make sense?
Yeah, I think so.
Okay. Is there anything else you wanted me to show you on PineScript? And there's this guy right here is the kind of the interactive manual. I don't know why it's so slow today, but
Missed wherever you clicked.
so this is the last thing I had a question on vertical lines in PineScript. So if I do that, let's see if I can get it. Can I click on that? No. So how do I do a plot? How do I plot? It's a little chat bot. And what it's doing is it's reading the PineScript manual, and it will probably eventually come up with the sections out of the manual where it shows you how to do plots. Gives you a little link, and if I click on the link, it takes me to a web page, and there you go, everything you ever wanted to know about plotting. So that's how that works.
So,
Are you ready to start trading, you think?
ooh, it feels still,
A fuzzy?
I've taken it all in, and I got notes and summaries and things, and but yeah, I still feel a little naked.
Here, I'm going to show you something. Here's what I would recommend that you do. Okay, here's the trading panel down here. This is where all the brokerage accounts are. The very first one is something called paper trading. So if I go in paper trading and just connect, I have a phony baloney account with, oh, it looks like I played with this. Normally just has 100,000 in it. They're simulating commissions because in some instruments you could charge commissions per trade. And when you're running a paper trader, it doesn't always incorporate that into your P&L. So you might be making $1 billion, but you did a billion trades, so you didn't make any money because you just chewed it all up in commissions, I think. So anyway, this account has $150,000 of phony money in it. Now I can actually go in and place trades here. So I can just say, okay, that looks like a buy point. So I want to just buy. And it's exactly like if you were using real money.
And
Okay.
how do you know, like right now, I'm like trying to look around, like how do you know you're in the paper account?
Because it says paper trading right
Oh,
here.
down there.
Yeah.
Gosh, there's so many very important things seem very tiny.
Yes. Yeah, exactly. Exactly. I'll see if I can find you a video that kind of does a walkthrough for you of TradingView. But what I would do is I would create an account and I would go in the paper trader and I would just play with it and just start hitting buttons and see what happens. And that way you can try out some ideas and things. I'm gonna take that strategy out of there. Just learn how to drive the car first, right? That's
Yeah.
usually the first hurdle everybody has. How do I do this? How do I push the buttons? What do I do? A great time is in the morning between 8 and 10 when the market's actually doing something, right? So you can paper trade like this. Look, I made a little bit of money because I was down 13 and now I'm only down 12. So went up $1 in my favor. To close the trade, you simply just, so if I wanted to put a stop loss, I could just drag this down to wherever. So that looks like support there. And my profit target, that looks like resistance. So if I was a support resistance trader, that's how I would have set up my stop loss and my profit target.
And then you're just waiting for it to,
The nice thing about this is it's using real-time data right now. Okay, this is actually
yeah.
happening in the market right now. So you get a feel for how things trade. Whereas if you use that, remember that the DVR thing I showed you the other time, where it goes back
Yeah.
to a random point and plays back to,
The replay feature.
right. It's the way it goes from bar to bar is not correct. It goes from close to close, if that makes any sense, right? So bars paint really fast, whereas here you can see this bar is slowly going down. And I have, what am I in, a 15-minute time frame? I have 15 minutes before the next bar is even going to paint. So I have an opportunity to make a billion decisions between now and then. Do I want to stay in this? Do I think it's going to continue going down? Maybe I should have did a short instead of a long, etc. So you get a little feel for the psychological part of trading. That makes
Yeah.
sense. Okay. So that would be my recommendation. Set up your account. It's free. You don't need any of the pay for stuff to do this. Start mashing buttons to see what they do. Just go in the paper trade. There's no money. It won't, nobody dies. You don't lose any money. So you just do your thing.
Okay. And what do you think is the kind of learning curve to, I know you talked around at the very beginning, some other estimates that you had on, oh, it'll take you a year to get to X or whatever.
If I was you, I would spend at least a month just learning what all the buttons do. If that's even, if you have the time, do you have time in the morning?
I will soon, yeah.
Okay. Or you can do it at night. The market reopens in Asia at 7 p.m. It's slow, but you'll get a better feel for it in the morning because that's when the London and the US market overlap. So that's like the most volume that you're going to see. I would trade like a Euro USD pair because that's the biggie. I'm going to close that one
Oh,
out.
not the Aussie thing.
No, no, because I want you to get a feel for how things move. So this pair right here, the Euro USD pair, the most heavily traded currency pair on the planet. And even if you trade this one at 7 o'clock at night, you'll probably see some action with it. You'll get a better feel for how things would trade, right? You can try different strategies like things you may have read about in the candlestick book, or if there's a particular indicator that you like, you can put that on your chart and try experimenting with that and seeing how things work with that. You can decide which time frame you want to trade in, right? So if I really want to see what's happening, I could go down to a 1 minute chart and then I get a new bar every minute. So that gives me a little bit more of a feel for what's happening with price.
But you like the 15-minute generally?
Yeah, I like the 15-minute chart because that's where I like to place my entries, but a lot of the data I'm collecting from higher time frames. So think of it like it's how fast do you want to trade, right? Some people are action hounds and they trade these small time periods because there's a lot of stuff going on really fast all the time. They're usually really young because this stuff, remember I told you that when you do this, you are literally in fight or flight mode. So your body is releasing adrenaline and you will sometimes be exhausted when you're done trading. So young kids can do that, and they have the attention spans of fleas, so they want something going on all the time.
Yeah.
Personally, I am taking my cues from the 4 hour chart or the 1 hour chart because it takes a lot longer for something to set up on that chart than it does on a 1 minute chart. And if that is a symbol, or if that is an indicator that is correct, that meaning that it's going to work, the amount that it's going to move is going to be farther. So your potential for profit on a 4 hour chart is much larger than your potential for profit on a 1 minute chart. You might be able to make 2 or 3 pips on a 1 minute chart. You might be able to make 20 or 30 on a 4 hour chart. Okay. So that's you got to think through all those things and decide what you want, how you want to do it.
So
Play with get TradingView set up. Here's
yeah.
what I recommend. Get TradingView set up, figure out how to use paper trading, play with it a little bit, write down a bunch of questions, and then come back to me and we'll do a session just going through all that. And answer your question, a month or 2 or 3, it's up to you when you feel you'll know how to use the system. Then I would spend a few months paper trading in real time, not the,
Oh, isn't that what I was doing in this case?
you may be combining the two, but I got a feeling you're going to spend a lot of time figuring out what buttons do rather than figuring out how to trade. At least that's what I've
I
seen
see.
in the past, okay? Once you feel comfy with what all the buttons do, then you can start to paper trade. The amount of time you want to do that is up to you. I recommend at least a month. I've had people want to switch to live trading in a couple of weeks, which is a bad idea, but I can't make them not do it if that's what they want to do. And then once you've paper traded for a while, seen some stuff as far as the behavior of price, then you
Yeah.
can move on from there to live trading. And then I would recommend when you do go to live trading, start with a very small amount of money. So that might be just like $100, right? You're only going to make or lose pennies, but it's the same feeling as when you're making tens of thousands of dollars.
And you mean have an account for $100?
Yeah, you don't need a lot of money to open an account. And once you get to that point, I will show you how to get an account going. But right now, I would figure out how all the buttons work, play with the paper trader, get some of that under your belt, get a bunch of questions written down so that we can go through and I can make sure you understand what everything is doing properly. All right, that's all I got, unless you want to hear one of the songs.
Yeah, sure. Give it to me.
All right, tell me what you think.
Not much of a.
This is a guy. Funny story with this guy. He is a tech support guy for a company called Test Out. Are you familiar with them?
No.
We have so if you want to get a network security certificate, something like that.
Yeah.
He's a network security guy, and there was a product that we were licensing from him, and I had to go through the training on it. So I was here doing this, and he saw the guitars in the back, and he started asking me all about them. And anyway, long story short, he was a musician too. We hit it off. He's every artist that I've ever worked with. They are usually really great musicians, but they don't know anything about money. They don't understand the business, copyrights, all that stuff is crazy. And a lot, more than not, absolutely do not understand the technical aspect of recording and producing and arranging a song. And that's what I do. I help them with writing the music and I help them recording it and producing it. So this song you're about to hear, I played guitar on, played bass on it. He does the singing. I can't remember where we got the drummer. Anyway, because of technology, your physical location no longer matters. Okay. So I can do a Zoom session, except it's a music recording thing. And I can do a recording session for a band and put all the pieces together. So the process is basically you write the song, everybody agrees with how the song should sound, and then you record it. And then once it's recorded, we talk about how we want to arrange it, the tempo at which the song is played, the instruments that we're going to use. Anyway, this ended up being an R&B song, a mid-tempo song. I wrote the song, I wrote the lyrics. He does all the singing because he sings way better than I do. Some of the doo-wops and shit in the back, that's me, but he gets the credit for the singing parts. Here, listen to it and tell
Cool.
me what you think.
She's got a fire in her eyes, the danger grows, whispers warm poison in my ear, sweet and slow. My heart's a gamble, I'm all in here. We red lips, sharp like a knife, every touch cuts deep, breathing life. I know she's wrong, but feels so right, losing myself in a dark delight, reckless and cruel. Yeah, I'm her.
So you get the idea. This is
Yeah,
I
that's
love
great.
it. This shit is so much fun for me. And
Got a lot of good lines in there.
yeah, yeah. It took a while, but yeah, we got it right. Yeah, this is what I do for fun. There's no money in it at
Awesome.
all.
Especially with the AI music coming down
Yeah,
the road.
yeah, absolutely. Oh yeah, I have friends that are terrified. I'm like, hey, you just got to
Yeah.
figure out how you're going to harness that and use it in your own stuff. The creative process is still the creative process. Plus, those guys are getting the shit suit out of them. I don't know if you're paying attention to that. All of the major
And
record
lives.
labels have a class action lawsuit against all of those. Like, if they survive, I will be amazed.
I would have thought the same, but I was reading through some appellate court rulings about, I think it was the New York Times against OpenAI and somebody else against someone else big. And both of the judges, one of whom was, I think, democratically appointed and the other Republican, had basically the exact same take on copyright in this case. And that because there was significant transformation in the use of the material, that it didn't really apply.
I follow this one attorney, and she's the one who actually filed the class action lawsuit. So,
Mm,
since I think, and I'm familiar with what you're talking about, but since that has happened, they have been able to prove that those companies actually bootlegged the music from Spotify and some other music sharing sites to train their model. And that's where they're going to get them, because their whole defense was the fair use defense. And just like you said, well, we're changing it, we're tweaking it, we're doing it, whatever. But now there is evidence that shows that not only did they use the entire Spotify catalog to train the models, but they stole the Spotify music to train the models. So
mm.
it's going to be interesting to see. Here's my prediction. My prediction is they will figure out a way for the artists and the record companies to get paid a little bit somehow, some way. And if they can do that, then it'll all go away and nobody will care anymore because they'll get their piece of the pie. Because right now they're not
Yeah.
getting their piece of the pie, and that's what's causing all the lawsuits. So,
Yeah, just how it was with streaming to start with.
yes, yeah. And this woman, she does use the whole Napster case as a big evidential piece in her case. All right,
Yeah, it's really interesting.
have fun.
Yeah,
Have a great rest of your
thanks,
week.
Bill.
See ya.